Hey, good afternoon, everyone. So sorry that we delay our webinar because our analysts are out for briefing. So and also thank you for your time for joining us today. So for today, we will be talking about giving an update on the results that we have last week. So we have UOB, OCBC, Thai Bev, Sheng Siong, Singapore ONG, Sembcorp Industries, as well as Sembcorp Marine. So for without further ado, let's go into the slides. So for UOB and OCBC, my apologies that Jeremy, our banking analyst, is not around today to give you the updates. Nonetheless, I'll just run through what's his call for both banks. So for UOB, he has actually upgraded to buy with a higher target price of $29. And as you can see that net interest income actually grew 14% year on year. And also he believed that the exposure to upstream ONG sector has been reduced and the portfolio has been cleaned up. And the catalyst for this stock is actually the wealth management fees, which has actually grew by 29% year on year. Next, we have OCBC. OCBC, same. He has actually upgraded to buy with a higher target price of $13.94. And similar to what we have seen in UOB, net interest income actually grew as well with 14% year on year. And you also see that the bank has actually cleaned up a substantial portion of the offshore oil and gas exposure. And similarly, we are seeing a strong insurance and wealth management growth. So with that, that's the main drivers behind the upgrade. Okay, so now we'll move on to that Thai Beverage. So for Thai Beverage, as you can see that both the alcoholic beverages are actually seeing some weaknesses, where if you look at spirit sales, if you exclude the Grand Royal that they have just acquired in the fourth quarter, right, the sales actually came down to about 13% year on year. And as for beer sales, it actually came down 4% year on year. So what we are seeing is that the first Q 2018, if you compare to the previous first Q 2017, which has actually a low base due to the mourning period, we were expecting that the pickup will come back stronger. However, it actually was much slower than what we have expected. Sorry. I'm sorry. So this is actually because that it coincides with the excise tax that we have seen in the September 2017. So yes, we saw a spike in beer volume sales in August, but it actually tapered down throughout the remaining months. Sorry. Nonetheless, the top line is actually supported by the other non-alcoholic segments, the NAB side, as well as the food. I'm so sorry. However, we take comfort that if you look at the beer business for Chang, they actually managed to maintain the market share at about 38%. So what this means is that the entire beer industry in Thailand remains soft throughout the 2017. So as you see that as it flows down to the NPAT segment, it actually contracted at about 61%. This is mainly due to the lower associates contribution coming from FNN and FCL. We also saw a 2.3 billion one-off acquisition cost, and as you know that they have been on an acquisition spree in the fourth quarter last year. There's also a higher finance cost related to Sembcorp acquisition, which I will touch a bit more later regarding the loans that they have taken up regarding this acquisition. So if you exclude all these three factors, NPAT actually contracted at about 22% year on year. And if you look at the PATMI adjusted with excluding the non-recurring one-off acquisition cost, it actually came down to 32% year on year. So what happened is that it's actually not a very justified comparison because if you look at the entire 2.3 billion one-off acquisition cost, right, about 94% of this cost actually comes from Sembcorp. And in this quarter itself, Sembcorp's contribution is absent because they what they have done is that they have put in the cost for the acquisition, but because it was acquired in late December at 29th of December, so we haven't seen any contribution coming from Sembcorp side. The cost is not being matched to Sembcorp's earnings. Sembcorp's earnings will only come in from 2Q onwards. And this goes to the same for the higher finance cost as well. However, having said that, we are actually quite positive on FY 2018. So notwithstanding that we are expecting a broader economic recovery in Thailand, there's also a FIFA World Cup coming in to lift alcoholic sales. So for this, management actually gave a rough guidance of what you should be looking at in terms of how World Cup is going to boost the sales. So if you look at this year's, it's actually going to be held in Russia. It's not comparable to the previous World Cup, which was being held in Brazil because of the different time zone. So back then, when it was held in Brazil, the kickoff time in Brazil is actually equivalent to our midnight here, where it's at around 2 a.m. and so. So during this period, most of the audience are actually watching it at home rather than watching it outside. But if you compare to the two seasons previously, which was being held in Germany, so Germany and Russia, the time zone is quite similar, where the kickoff time there at 5:30 is actually equivalent to our peak period to enjoy beers outside at about 10 p.m. plus. So for this World Cup season is actually a representative of a very sweet spot for where consumers will drink more beers while watching World Cup. So having said that, the World Cup impact will not only come from Thailand side, it will also come from Vietnam, where you see Sembcorp is going to lift the beer sales as well. And it will only comes in at 2 quarter onwards. So with that, we maintain our buy call with our lower target price at $1.05. So let's take a look at what happened during their acquisition spree in the last quarter of 2017. So here I've actually tabulated the payment they have made, the effective interest that they acquire, as well as what was being contributed to Thai Bev on a group level based on their first Q results. So then we actually gain a better view of the implied PE that they have acquired, as well as the net margin. So do note that if you look at the net margin side, this acquired business actually has a better net margins as compared to their existing businesses. So for Sembcorp side, because the earnings or the revenue will only be consolidated from second quarter onwards, what I've done is that I've referred to the FY17 announced results by Sembcorp to come up with the implied PE as well as the implied net margin. So as I mentioned just now, what actually spooked the market on this Sembcorp deal is that, firstly, at a PE of about 42 times is not cheap. Secondly, they're actually acquiring 26.26 effective interest. So yes, they actually acquired about 56.4% of Sembcorp together with their Vietnam JV partners. So the JV partners actually has a higher stake of 51%, and Thai Bev actually holds 59%. So if you look at that, Thai Bev is actually taking on all the risks of getting the bank's loans for this acquisition. So this 152 billion, right, was being borrowed by Thai Bev from various banks, and they loaned out 51% of the cash payment to their Vietnamese JV partners. So investors are actually seeing that with a lesser effective interest rate, but the entire costs are being bared by Thai Bev, they are feeling a bit unjust for the risk taken. However, management actually shared that why did they took on such a huge risk. So first thing first is that they see Sembcorp as a very rare asset. As you look across a very big beer businesses globally, which has minimal foreign stakes in it, Sembcorp is actually one of them. And to get a majority stakes so that they can have a say in Sembcorp, they have to take on the bidding together with a local partner, because Sembcorp, or under the Vietnamese exchange law, it actually caps foreign stakes at 49%. So this is why they have took on such a risk and at such a high price. However, having said that, if you look at how Sembcorp is going to contribute to their beer business, we have actually assumed a minimum effective interest of 26.3%, and the group actually guided that the auditors are looking into the effective interest. It may be higher than what you are seeing at 26.3%. So if we assume conservatively at 26.3%, and if we look at zero growth coming from Sembcorp, right, meaning that we are taking the base case of their 2017's revenue and net income, it actually will contribute 37% of the beer revenue this year, and this is only 3 quarters for 3 quarters, and it's going to contribute 43% for the next year. And same goes for Grand Royal, which would contribute about 8%, and the newly acquired Spice of Asia, as well as the KFC outlets, which would be at about 27%. So And this we have actually taken a very conservative assumption where we assume zero growth compared to the previous um, registered revenue as well as net income. And do note that management actually guided that for KFC outlets, they plan to uh, to in to add another 20, at least 20 stores this year. So how we look at this for acquisition is that um, one thing for sure, that they know that within the ASEAN region, Myanmar and Vietnam are the upcoming high growth market. And for Myanmar, Myanmar is a whiskey drinking market. So where they go in is Grand Royal, which is dominant in spirits market. And for Vietnam, they are actually a beer drinking market. And so the company went into tobacco. So just to recap, we have a buy call with a target price of $1.05. Next, we have Sheng Siong. So for Sheng Siong, we are quite the results are actually in line with our expectation, where the top line actually grew at 4% and the bottom line at about 11%. So despite the first half being weak, second half actually catched up. And we believe that the momentum should continue into 2018 with a favorable macro tailwinds, where you are seeing a brighter economic prospect, a stronger consumer confidence, which would then spur spendings. And we also believe that the 11 new stores should continue to support the top line as well as the bottom line growth for this year, and hence mitigate the shortfall from the closure of 2 big stores, i.e. the Verge as well as Woodlands Block 6A store. So these 2 stores back in 2017, it actually contributed about 5% of the top line. So net effect, we believe that the group should be able to grow at about 3.5% at the bottom line for this year. And this is excluding any new stores bid that they would win in the coming months. And we believe that for this year, gross margin should be able to sustain at about 26%. And if you look back, the group has actually been improving their gross margin continuously. And for this year, we believe that the margin drivers will remain intact for them to be able to hold up at about 26%. So margin drivers are mainly coming from 3 key points. The first one would be coming from the efficiency gains from the central distribution center. Secondly, would be coming from the better sales mix, i.e. more fresh, as you know that fresh contributes higher margins. Currently, 44% of sales are from fresh, as it's actually 1 percentage point higher compared to the year before. Thirdly, it will be coming from a better input prices. Management share that is still currently a buyer's market where they have a higher bargaining power for input prices. And we like Sheng Siong mainly because that it has very strong financial position. It has 0 debt, and their net cash position actually improved to 73.4 million as of end of last year. So this should be able to support the expansion strategy. Last but not least, it will be the much talked about China store, their first flagship store in Kunming. So it opened in November 2017, but we believe that the gestation should take some time as some of the stores in vicinity within the shopping mall itself has yet to open. So startup losses for 2017 amounted to about 0.4 million, and we believe that it could increase up to 1 million for this year. So just to recap, we have a buy call for Sheng Siong with target price of $1.13. Next, Singapore O&G. As the title said it all, that it has a very strong fourth quarter to finish off 2017. So similarly, we are seeing a very weak first half and second half playing catch up. So all in all, the top line actually grew by 4%, but the bottom line contracted about 3%. So what we are seeing is a very solid growth coming from their core segment, the O&G segment. Gynaes actually mitigated the slower obstetrics segment. And we are seeing a very strong growth coming from the cancer-related segment. We believe that this cancer-related segment should be able to sustain its momentum into 2018. And we are positive on FY18's outlook. Not only because of the cancer-related segment going to continue to improve, but also two of the doctors who have actually broken even last year should start to contribute positively into the FY18 earnings. Last but not least, we are seeing the new segment, the pediatric segment, where it actually contributed 0.2 million to FY17's top line. So there are two pediatricians who joined last year, one in July and the other one in November. Both are on track to break even by end of this year. So with that, we maintain our accumulate call with a lower target price at 42 cents. So do note that we are actually cognizant that there are some corporate movement within the group itself. So with the resignation of CEO, they are still in search for a new CEO. But until they find a new CEO, we would be reassessing whether the new CEO would have a similar vision as well as a similar strategy as compared to the previous one. Next, I would like to pass on the presentation to Guangzi, who will talk about Sembcorp Industries and Sembcorp Marine.
Hi, good afternoon. It's Guangzi here. So next, I will talk about the results update on Sembcorp Industries as well as Sembcorp Marine. So now let's take a look at Sembcorp Industries. Our title is a new but same strategy unfolded. So we maintain our core accumulate with a little bit higher target price of $3.86, and the previous target price was $3.70. You can see the results here. The top line full year grew by 5.5%. However, due to the weak performance from Sembcorp Marine, which I will touch on later, the full year results, the PATMI dropped by 41%. So you can see here the Utility Singapore operation continue to contribute to the group positively. So also the Singapore segment, the PFO grew by 10%, and also the net profit increased by 24%. This was due to the improving performance from energy and water division. The next is the India's operation. It was continued it was dragged by SGPL. As of now, GPL is subject to short-term PPAs. That means SGPL will be negatively impacted by the short-term fluctuation of the power tariff. So in 4Q17, all these subsidiaries under India Energy Business deliver net loss. This was due to the higher refinancing costs from SGPL and the shutdown of some plants, and also because in the fourth quarter the higher coal price that resulted in a narrow spark spread. So as a result, the Indian's operation registered a net loss in full year FY17, and the net loss expanded to 55 million Sing dollars. So the marine side, the performance was bad. I will touch on later when I present the Sembcorp Marine's results. So the more important thing is the management finally unfolded the strategic review on the whole group. So here are the summaries. So for utility segment, the group will continue to focus on gas and power, merchant and retail power, and renewable energy businesses. And they will balance the current portfolio with more focus on 4 key markets, namely UK, China, India, Singapore, and Southeast Asia. So the short-term catalysts we can look forward to are the monetization on the existing assets, which including the divestment of some peripheral utilities asset to increase the cash reserves up to $500 million Sing dollars. And also the group will propose the IPO of India Energy Business under Sembcorp Energy India Limited. Another point is the group will double the renewable capacity to 4,000 megawatt by 2020. For the marine side, the management didn't disclose a lot on it, and they say that they will continue to support the marine segment through the cycle. For the urban development segment, they will move up the value chain from the current base of industrial parks to the integrated townships and business hubs and smart cities. So the final goal of the whole plan is to gain back the double-digit ROE. As of 2017, the ROE was recorded at around 5%. So how do we view this strategy? We think that in the short term, if the group persists the IPO in the near term, it can monetize the India Energy Business at a good prices. Because as we knew that the current market momentum and sentiment is quite bullish. However, we expect that the marine side will continue to perform poorly due to the slow recovery of the drilling segments. So that means it will stall the recovery on the on the whole group. In the long run, we think that the plan it can lead the group to the right direction, as after all, we think that the clean energy is one of the few mainstream development in the future. And also, we think that the diversified portfolio can favor the group to gain a higher growth while lower the geographic and operational risks at the same time. Next is Sembcorp Marine. It is a disappointing year for the whole group. So we reduce our rating to we downgrade our rating to reduce with unchanged target price of $1.91. You can see here the last year Sembcorp Marine performed poorly due to the lower sales volume from the rig building and offshore platforms. So one positive thing we can see is the order flows started to pick up in last quarter. So in October, it secured the contract to dispose 9 jackup rigs for close to $1.8 billion. And in December, the group also secured a $490 million contract. And in the same month, it signed a letter of content for the construction of an FPU. So we can see that the latest contracts were mainly from floating solutions segment. And the negatives is the net order book continued to decline. So as of December last year, it was recorded at 7.6 billion Sing dollars compared to FY16 $7.8 billion. And also the management say that as of end of last year, the floating LNG business remain very quiet. They haven't succeeded in translating inquiries into contracts. So for the outlook in this year, we think that Sembcorp Marine will continue to face a challenging operating environment. However, we are more positive on the non-drilling solutions. As you can see that it can secure more contracts from the floating businesses. So this is the end of our webinar. So the next is Q&A section.
There's a question on Singapore NG regarding the level of growth for the cancer segment and the margins for this segment. So if you're referring to the 2017 one, is actually shown here. So the top line actually grew 37%, and if you're looking at the EBIT level, it actually sorry more than doubled, and if you're looking at the margin, it actually expanded by about 10 percentage point to 33.9%. And for this segment, right, looking at 2018, so 2018, one of the Dr. Lim Siu Kwan, is one of the doctor who have actually break even in FY17. So she should be contributing positively into this year's earnings. And if you look at the EBIT margin at about 24%, right? This is also taking into consideration of the gestation period for Dr. Lim Siu Kwan. So given that she has already broken even, and we may be seeing a higher EBIT margin coming in for cancer-related segment, and it could be up to 30% or more. Okay, there's some questions on Thai Bev and Sheng Siong. So I'll just go for Thai Bev first. Okay, how does the performance of Thai Bev compare to their competitors? So as mentioned just now, if you look at the beer business for their local beer market, right, is actually maintaining their market share. So you can see that the entire beer business in Thailand was big in 2017. And if you compare, sorry, and if you look, and there's another question, I'm sorry, and there's another question on Thai Bev regarding, to clarify, the Vietnamese partner do not carry the cost of debt for the acquisition. No. What they did was that they loan out the 51% of this 152 billion to the Vietnamese partner. So the cost of debt that the Vietnamese partner carries is actually higher than what the cost of debt that Thai Bev carried. So in this sense, the Vietnamese partner is also using Sembcorp's shares as collateral. So whatever dividend that they receive from Sembcorp actually will go into Thai Bev. Under the term loan from Thai Bev to their Vietnamese partners, is that they would target or aim towards clearing this loan, this 51% of 153 billion, 52 billion. They aim to repay it within 1 year. But there are talks regarding whether they can pay it in time or not, whether they are going to extend the term loan given to their Vietnamese partner, or if in case where they couldn't make it for within 1 year, whether Thai Bev is entitled for that 51% shares of what they have acquired that are still under negotiation. So I can't really comment on that part. As for Sheng Siong's, how does Sheng Siong perform as compared to their competitors? If you look at retail sales index or the sub index for retail sales index, right? You look into the supermarket sub index, it actually went up in a very high single digit for the last quarter of 2017. So I believe that the market has actually recovered for supermarkets, and um, the management actually shared that they have not loosened any market share in that sense. So I believe on par, the competitors are actually performing on par. But nonetheless, if you want to compare against dairy farm actually has a very diversified business in terms of geographical area, and that their results will only be released in early March. So until then, we'll be able to compare more significantly. So another follow-up question on the cancer-related segment. So there are currently three doctors, three specialists under the cancer-related segment. So all three of them has actually broken even as at 2017. Yep. So what do I mean by a doctor or a practitioner? Sorry, breaking even. So basically, when you hire a new doctors, right, you need to provide um, an amount of time for them to gain enough patient volume to break even at the EBITDA level, as they are fixed costs into starting up a new clinic. So there are staff costs as well. There are fixed costs like rental costs, utilities costs, even like the machine or equipments that they have brought in. So you need to gain enough patient volume to see them to break even at the operating level. So usually, if you look at the latency period for a new hire or a new doctor to is roughly about 8 to 1 year time, and that also depends on whether is the new doctor is someone junior or someone senior with established patient pool. So with established patient pool, of course, the latency period will be much shorter than as compared to a junior doctor. Our target price is moving 12 months target.
Okay, there is a question asking about Sembcorp Industry, whether the diversification into green energy will make some good recovery from it, because the green energy industry is very crowded with global players. So as you can see here, the strategic outlook, yes, it will diversify the portfolio into green energy, but not overnight. Currently, it will focus on three sub-segments, which is gas and power, merchant and retail power, and the last one is renewable energy. So because the footprints that they are gonna focus are in UK, China, India, Singapore, and Southeast Asia, these global footprints includes both developed and developing countries. That means they are quite confident to maintain the existing market positions in these four markets. And on the other hand, they say that they will switch the strategy from the existing project-based model to platform-based model. That means in the future they will deliver or develop the projects that are like the current Singapore one, the centralized and utilities platform, to enhance the return, and at the same time to reduce the operational costs. And also in Southeast Asia, quite a few regions that are conducting electrification. That means these regions have quite a few opportunities to expand their infrastructure in utility segment. So there is another question asking about the oil price outlook from the management. The management didn't disclose any guidance for the oil market. Yep. So another question is asking about whether the current oil price rise can improve the performance of the Sembcorp Marine's performance. We think that there will be a lag between the performance and the oil prices, because for the upstream side, the major oil players, they are still cautious to ramp up their E&P as of now, though we see the momentums started to kick in since last quarter. We think that the current prices can only enable the oil majors to recover some E&P spendings to the limited extent. So that's why it will take time for Sembcorp Marine to secure large orders, especially from drilling solutions like jackups projects. Another questions about Sembcorp Marine is that whether what will be the potential growth for Sembcorp Marine given the underperformance and any visibility in FY 19. We think that so far is not easy to make the forecast at this point of time, as now the oil price seems will be stabilized at above $60 per barrel, and the current oil price level is not high enough to strengthen the confidence for those oil majors to fully recover all the E&P expendings. And also, Sembcorp Marine emphasized that they will focus more on the non-drilling solutions such as the nearshore floating LNG. However, they say that they have quite a number of inquiries of these businesses. They still cannot secure the contract so far. That means the clients, though they show interest, they are still concerned whether to make investments into nearshore LNG is can be profitable for the next couple of years. There is a questions asking about recent oil industry analysts reported that oil price recovery to be 2 to 3 years in next and after next year and after. So whether there is any latest report of a nearer recovery rate to recover the whole oil and gas sectors. So I suggest you can surf on the OPEC official website. Every year they will publish the World Oil Outlook, and also you can go to the IEA or EIA official website to download the updated report of the international oil market. Another question's asking about the presence of Sembcorp Industries in Southeast Asia. So at this point of time, they have operations in India, Singapore, Bangladesh, and actually you can Google you can surf on their official website, Sembcorp Industries. You can see all those projects that they are running globally.
Okay, if there's no more questions, thank you again for your time for our delayed webinar today. And please stay tuned with us next week. And thank you again.